2022 has been a rough year for most investors, but how can we make sure that your portfolio will do better in 2023? I've analyzed what the hedge fund manager Michael Burry thinks about what's coming in 2023. He was out of the media's radar for quite some time, but now he's back with some investment advice during times of economic uncertainty and high inflation. Let's start with stocks. Burry sees that the current state of the stock market is highly overvalued. He believes that it's amid a bubble that's eerily like the one that led to the dot-com crash in 2000. In November last year, in a tweet, Burry warned that he sees a historic overvaluation and speculations in the stock market. In the tweet, he writes that there are more speculations and more overvaluation than in 1920. But even after these statements, Burry's actions contradict his market guidance, as he just bought his first stocks after he sold his entire portfolio in 2019, just a couple of days ago. We'll go in depth into what stocks make up 50% of his portfolio later in the video. Michael Burry has a pessimistic view of the stock market. Back in 2019, he warned about exchange-traded funds, also known as ETFs. Burry believed that since the interest rates were very low in 2019, the stock market would attract huge sums of money from investors. And in fact, it did. The popularity of passive investing pooled more money in the top US companies, which led to a huge rise in stock prices. The stock price increases were not only based on the performance of the companies, but also pushed by passive investments. The passive investments were a result of low interest rates. The low interest rates gave people extra money to put in the stock market. Burry says this bubble is doomed to break sooner or later. Even in such uncertain times, Burry is optimistic about investing in some sectors, but mostly outside the US. He said it's not hard in Japan to find extremely undervalued stocks. So for now, Burry is not a fan of investing in US companies and guides to look for more opportunities beyond the US. The international stock market might provide the value that you're looking for. Active, as well as passive investors, should consider the advice as an eye-opener to make the most out of their investments. Even after these statements, Burry just bought into prison stocks in the US. His biggest holdings right now are Geo Group, Curate Retail, and Core Civic. Time will show if these are good investments. But I would guess that Michael Burry knows what he is up to. It is hard to understand what Michael Burry thinks, as his actions are different from what he says in the media. Burry isn't the only one who sees trouble on the horizon for stocks. Warren Buffett has also warned that the market is looking frothy, and the investor Jeremy Grantham has said that we're in the late stages of a mammoth bubble. But what about the changing inflation and interest rates, which would greatly impact investing decisions? Let's learn what Burry thinks. Interest rates and inflation. Post-pandemic, when the government tried to protect businesses and individuals from going bankrupt, the government had to spend a whopping $5 trillion. This stimulus package resulted in inflation going through the roof. It is interesting to notice that Michael Burry predicted the rising inflation in November last year. In a tweet, he said, "Prepare for the inflation, reopening, and stimulus on the way." At the time when Burry made the call, the inflation rate was positioned at a mere 1.7%, but now it's over 8.5%. While some inflation is normal and even necessary for economic growth, uncontrolled inflation can be detrimental. It can force the government to increase interest rates to regain control. A larger increase in inflation leads to lower consumer spending and decreased economic activity. These results are bad, and that is why it's important to keep a close eye on inflationary trends. Interest rates have already decreased drastically, and if inflation continues at the same pace, Fed will likely increase interest rates even more. This might result in a market crash next year. Bitcoin and meme stocks. Investing in Bitcoin and meme stocks has been a trend lately. A lot of people made a fortune from the trend, but what does the future look like for these investments? This is what Burry thinks the outcome will be. Burry recently warned against investing in these kinds of assets, as they're driven by hype rather than fundamentals. Burry thinks Bitcoin and meme stocks are going to crash even more. Even with this recent fall in crypto, he thinks the bottom is not yet here. While some investors have dismissed Burry's concerns, his track record suggests that he knows what he's talking about. Be cautious about investing in assets like Bitcoin and other cryptocurrencies. To summarize, he has warned about investing in the inflated stocks of US companies and tells investors to look outside of US markets to find better opportunities. He is also currently warning about the dangers of investing in Bitcoin, meme stocks, and SPACs. While these stocks are tempting, they're also very risky. So if you're thinking about investing in any of them, be sure to do your homework and be careful. Thanks for watching. Please do us a favor by liking and sharing the video if you found it interesting. If you haven't yet subscribed, then this is the best time to do it. Thanks for watching.